Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to keep up with me, guys, when I'm not on YouTube, do me a big favor. Get down to the description box. Click on that Instagram link, Richard Fain Millionaire Mentor Instagram link, and consider giving me a follow. And if you do decide to give me a follow, certainly send me a DM to let me know that you're rocking with me. I certainly would appreciate that. www.richardfain.net. That's the new website address. Second link down in the description box. Do me a big favor, guys. Go over and check out the new website. 200,000 of you guys have already done that in the first 3 months we've had this thing up and running. We're very, very excited about the website. We got a lot of really neat things that we're in the works to develop. We got a newsletter coming out that's going to be jam-packed. A newsletter that we'll be sending out to everybody who stops by the website. We got some other exciting things that we hope to roll out before the end of this year for the website as well. But so far, so good. We have 10 really good digital products handpicked by me that a lot of you guys have made the decision to make an investment in your financial future and grab those products and collapse timeframes and help you get to your pot of gold at the end of the rainbow. So congratulations to everybody who decided to make that investment in themselves. And certainly you can email me and let me know what you think and how you're doing with the actual digital product. Did it help you? I think it will, but certainly open to your feedback. Also, if you don't mind, consider joining the private mentorship club, the fastest growing financial community on Patreon. You can join through my website. Like I said, second link down in the description box. We're close to 800 club members in 3 months, and it's growing. And the reason it's growing is because people understand the power of community. I don't know, back when I was growing up, you're talking about in the late 70s, early 80s, it was all about community. It truly was a village raising us to be adults. It was a village. It wasn't one family isolated, didn't know the next door neighbor, didn't know anybody. No, we knew everybody in the neighborhood, in the community that I grew up in. We didn't have a lot, but what we did have was love for one another, and we looked out for one another, and we took care of one another. And that's what we're doing over in this financial community that I was so fortunate to start. If you want to be a part of that, man, get yourself to the website, click on that membership, click on that join button, and get yourself a part of this financial community. It's wonderful over there. The community chat is lit all day long, and they are making some big moves over there. I was over there earlier today, just watching, and people were just taking this stock market collapse. Of course, that's what I call it, but you guys know how that goes, right? Y'all know how this YouTube thing works. That stock market collapse, they was taking it in stride. Nobody wasn't freaking out. Nobody wasn't saying, oh my goodness, I'm finna sell it all. No. Why? Because they understand what we go through over on that fastest growing financial community on Patreon. What we go through is we talk about the psychology of the stock market. We talk about temporary corrections. We talk about those things. So they know that's a part of the stock market. That doesn't mean they need to freak out. That just means understand that's a part of the stock market. If you still believe in your investments, double down. Buy you some more. Big risk, big reward. We understand that. When it's time for you to tap out, tap out. Sell that stuff and get out of it. You ain't got to wait. When the pain get too tough, tap out. Just tap out. Sell it and get out of there. No one's going to hold that against you. It's your financial freedom, right? So I love that about the The private mentorship club is in the community chat all day. Nobody wasn't freaking out. People were saying, oh, I bought at 114. Oh, I bought this, I bought that. That's what I like to see. People that are not afraid. They understand what's at stake for them in your financial life. And they're not gonna let fear steal it from them, right? Just like we mentioned this morning, when they are fearful, you need to be greedy, right? So, yeah, think about joining that private mentorship club if you want to wrap yourself around some people that going in the same direction you going. Last thing, and then we're going to get into this because I ain't going to keep y'all long. Moomu, my self-directed brokerage app. First link down in the description box. The good folks at Moomu are going to give you up to 20 free stocks. Up to 20 free stocks for just trying out the Moomu brokerage app. Here's the qualifiers. When you put $100 in your Moomu account, when you initially open it, you get 8 free stocks. You put $1,000 in, you qualify for the 20 free stocks. That's where you get the full 20 free stocks, is when you put $1,000 in your Moomu brokerage account when you open it. So guys, 18 to 80 years old, if you're trying to build wealth and you'd like to use paper assets to do it, give Moomu a try. Fractional share trading, automatic investing of your dividends. You can't beat it, guys. World-class brokerage app that I use every single day. It's my primary brokerage app. Give it a shot. Give it a try. First link down in the description box. Go get that free stock. Go get that free money. Now, if you do decide to give it a try, you put your 100 in or you put your 1,000 in and you're ready to figure out how to use the brokerage app, you can send me an email through my website, www.richardfain.net. Second link down in the description box. Just send me an email to the website saying, Richard, I'd opened my Moomu account. I funded it, and I'd love to learn how to use this thing so I can start buying paper assets to build my wealth. And I'll send you out the tutorial videos. Plus, on top of that, I'll send you out 2 videos outlining what I'm buying in paper assets to build my net worth, to build my wealth. So if you want to know what that is, you can copy my plan or you can create your own plan. But there is no excuse, guys, for us not to be building wealth in an environment that we're in now. Don't get me wrong. I know we had a bad day in the stock market, but it depends on how you look at it. I didn't think it was a bad day. I thought it was a great day because I understand you build your wealth in the red. You collect your wealth in the green. You build your wealth in the red, you collect your wealth in the green. That's how the stock market works. It's a continuous bull market. It never stops going up. It only slows down temporarily. And they call that a bull market correction inside of this continuous, they call that a bear market correction inside of this continuous bull market, right? So as long as you know that psychology, you don't worry about these temporary corrections or consolidations. You don't worry about it, right? See, this is what I worry about. If the entire stock market is doing great, but my company or my ETF is doing bad, then I got a problem. But when the entire stock market is doing bad, all 3 major indexes fell off, I ain't got no problem with that because I know that's market behavior. They got to do with my company. If everything else is doing well and my company is doing bad, yeah, I got a problem. But if the whole stock market is doing bad today, why am I freaking out? That's a market behavior. That's not business performance. So settle down. We're going to talk about it. Let's dive into it. Here's the headline. S&P 500, NASDAQ tumble for the worst day since 2022 as Tesla and Alphabet slide after quarterly results. So that right there kickstarted this whole thing last night when Alphabet, aka Google, and Tesla, after hours, came out with their second quarter earnings report, and they were lackluster. They were shaky, wasn't very good, wasn't very bad, but wasn't a winner. A winner is when you beat all market expectations. That's a winner. This one was sort of like didn't quite do it. Didn't quite do it. So guess what? The market sold off the next day, which is today. Wasn't a surprise to me. I was locked and loaded and ready to purchase, but I was waiting on my number, and my number never came. So I kept my money in my brokerage account, ready for tomorrow. Maybe it'll come tomorrow. I love when people drop comments in my comment box of my videos I do on NVIDIA, because they know I love NVIDIA. So of course, they want to do the opposite because they want to try to irritate me. But it's not irritation. Oh, I'm telling you, it's going to go down to $95 a share. They just don't understand. I hope it does. Y'all ain't heard me, man. I hope it goes down to $95 a share so I can buy another 5,000 shares. Please go down to $95 a share. Because I know it's market behavior, guys. It's not business performance. Market behavior corrects itself because we're in a continuous bull market. See, market behavior is temporary when it corrects. It's temporary. See, business performance could be permanent. That's when I'm going to have a problem. But if NVIDIA wants to go down to $95 a share right before they come out with them Q2 numbers on August 28th, go right ahead, buddy. That's just going to make me more wealth. I told you guys, you build your wealth in the red. You collect the wealth in the green. So go ahead and go down to $95 a share before Q2 numbers come out. And I know they're going to kill it. That's just going to build more wealth for me. So keep dropping. Keep making the comments. Keep on making the comments. Maybe you can speak it into existence for me. I'd love it. Because I know after August 28th, everything that I bought down here in the red, at least that's what I believe. I'm not a financial advisor. I'm just a guy on YouTube. I don't know what I'm talking about. I'm not a trained stock picker. I'm not a trained analyst. I don't have a CFP. I'm not a financial advisor. I'm just a guy that's been buying paper assets for 30 years and build a level of wealth that I can control 100% of my time. So I don't know. You make the determination if I know what I'm talking about or not. Stocks sold off Wednesday, weighed down by underwhelming reports from two mega cap tech companies leading the S&P and the NASDAQ composite to their worst session since 2022. Dude, that's 2 years. Wow. The broad market index lost 2.31%, closing at 5,427.13. That's amazing, guys. We're like over 200 points down from our high. I think our high was 56.69. So we're basically almost 250 points off of that. And that was just a couple of weeks ago. That's that temporary correction and that consolidation. That's all that is, right? Temporary correction and consolidation inside of a continuous bull market. That's all that is. NASDAQ slid 3.64% to end at 17,342, way down off of the all-time high that was hit a couple of weeks ago. Way down off of that. The Dow even slid 504.22 points, or 1.25 to close at 39,853. Now, you know the but the Dow just a week ago was up in the 41,000 range. So they even fell. So what does that tell you? This was just not a tech fail today. This was a complete market fail, right? Because obviously the NASDAQ is heavy tech. The S&P has 500 companies in it from all 11 different industries, but it's tech heavy because the top 7 companies in the S&P are all tech. So they kind of say the S&P is tech heavy too because of the heavyweights in there. But when you look at the Dow, that's not tech heavy. You got financial institutions in there. You got all kind of stuff in there. And they even slid. So it was a broad market slide today. It wasn't a tech slide. Now, some of your biggest tech companies had bigger slides. But my point is it was an overall market slide today when it comes to the stock market. Shares of Google, parent company Alphabet, fell 5% for their biggest one-day drop since January 31, over 7 months ago, basically. When they dropped 7.5% on January 31, they dropped 7.5%. Today, they dropped 5%. So what does that tell you? Just to stop right there for a second. So what does that tell you guys? Now, in January 31, when they dropped by 7.5%, guess what? They bounced back and they were better. So what does that tell you about this 5% that they just dropped? Now, it may drop a little bit more tomorrow, who knows? But eventually, what will it do? It will bounce back. So that's why I keep telling you, you build wealth in the red. You collect wealth in the green. It's coming back, guys. Have no fear. It's coming back. It's coming back. It's coming back. So don't worry about it. Don't worry about it. It's coming back. You mark my words on that one. It's coming back. It's coming back. Although Alphabet reported top and bottom line beat. So they beat on revenue, top line revenue, and they beat on net income. What they didn't beat on was some other areas of their business. Namely, a pretty big revenue source for them is YouTube. So they missed on YouTube advertising revenue, came in below the consensus estimate. So that's what they really missed on, and they missed on a couple other things. The good news for Google is they don't have a revenue problem and they don't have a net income problem. Those are good news items. That's why I tell y'all guys, this 5%, it's on sale. It's going back. When you don't miss on revenue and you don't miss on profitability, you're okay. That's coming back. So if you want a 5% discount, here's your opportunity. It might even be a further discount tomorrow, but that's okay. Again, remember, we're in a continuous bull market with temporary corrections inside of that bull market from time to time. That's okay though. Now let's talk about Tesla a little bit. Meanwhile, Tesla shares declined 12.3%, their worst day since 2020, on weaker than expected results and a 7% year-over-year drop in auto revenue. That's a problem. That's a problem. When you see a drop in revenue like that, guys, that's a business performance issue. That's not necessarily market behavior. That's a problem. Tesla got some things they need to work out. I still love Tesla, but they got some things they need to work out. Because in my opinion, that's a business performance problem when your revenue drops like that year over year. Just my opinion, guys. You do your own homework and figure it out for yourself. I'm still a buyer of Tesla. I'm just not a buyer at this price. I'm going to be a buyer at $150 a share, then I'm a buyer. But anything above that, I'm not a buyer. I'm a spectator rooting them on, but I'm not a buyer until they get to $150 a share. That's where I'm at on Tesla. Although I still love Tesla, I'm not a buyer where they're at currently. I'm only a buyer at 150 or less. Then I'm a buyer. Other major tech stocks fell in symphony with Alphabet and Tesla. NVIDIA and Meta Platforms, aka Facebook, respectively lost 6.8% and 5.6%, while Microsoft slid 3.6%. Okay, NVIDIA had a rough day. But again, we build our wealth in the red. We collect our wealth in the green. So for me, I was ready to go to pull the trigger on another 1,700 shares, but I wanted it to be at $110 a share. It got all the way down. I had it locked and loaded already in the trigger. I mean, in the what do they call it? The chamber. I had it already locked and loaded in the chamber, ready to go. All I needed to do is just pull the trigger, right? The financial trigger, that is. I was ready to go, but I didn't do it because I'm waiting on 110 or lower. Now, maybe it does that tomorrow. Maybe it doesn't. I don't have a crystal ball. Already got 8,300 shares, so I'm Gucci. But I want another 1,700 to give me a clean 10,000 shares of NVIDIA. Oh, golly, you're going to lose it all. Well, maybe I will, maybe I won't. Guess what? Here's the thing. It's my money. I can do whatever I want. Good news is, even if I go to zero, guess what? I got a high income skill set. I'll make it right back. See, that's the kind of guy I am. I don't worry about that. It's just money. Long as God gives me breath in my body, sound mind, I'ma hustle, I'ma help people, I'ma do what I need to do, and I'll get back on top. So I don't worry about that. I don't worry about losing money when I'm trying to bet on myself. I'm not betting on NVIDIA, I'm betting on myself. NVIDIA is just a byproduct of that, right? I love the company. I love what they do. I believe they gonna take me to another level of wealth. That's what I believe. You have to figure out what you believe about that company. I can't talk to you about that. I can't talk to you about Meta. I can't talk to you about Microsoft. I can only give you my experience and what I believe these companies represent as it relates to our economy, as it relates to our way of life. I mean, you're talking about companies, guys, that are huge companies. They employ a lot of people. They bring a lot to our GDP. I mean, they bring so much to our financial system. So again, I don't see this huge crash coming. I see a correction coming. Could it be a 10% correction? Could it be a 15% correction? It could be. But at the end of the day, even with the worst correction we've had over the last couple of years, guess what the market did? Turned itself around and went higher. Think about 2022. We operated in the negative the whole year. I'm talking about the S&P was like negative 20%. Guess what it did the very next year? Positive 23%. So don't let this bother you guys. If you're long-term and you're in big boy blue chip and you believe in it, stay the course. If you're not built for it or you reached the end of the road for you, sell this stuff, get out of it and go and live the rest of your life. Don't stay in because somebody else is staying in. Sell it all. Sell everything if you're done. That's the message, guys. If you're done with this thing and you got where you wanted to get to, or if it's just too mind stressing for you, get out. It's not worth it. It's just money. But if you're built for it, you understand the psychology of the stock market, you understand it's a continuous bull market that's going to have pullbacks, you're okay. As long as your companies and your ETFs are not experiencing business performance issues, you're okay. You're okay. That's my opinion. Those reports mark investors' first look at how mega cap companies fared during the second quarter. Reports from those names are of special interest to Wall Street, as this small cohort is responsible for the bulk of this year's gains. That's another reason why you see this sell-off, guys, is because when you look at the gains in the S&P 500, in the NASDAQ, it's largely attributed to the Magnificent Seven, led by NVIDIA. It is. It is. It's led by these companies. It's led by like the top 7 to 10 tech companies. That's what this amazing first half of the year charge was led by these companies. So now you see 2 of these companies report lackluster results. And again, I think Google had great results, honestly. When you beat revenue and you beat profits, when you beat those 2, how can you ask for any more? Okay, YouTube didn't do as well. So what? YouTube still did like $8.6 billion in revenue for the quarter, or year over year, whatever they measured. I believe it was a quarter. They still did like 8.6 billion. And I think the analysts wanted them to come in at like 8.9 billion. I mean, it's just little bitties. It's just stupid stuff. Just something to, you know what I'm saying? Just something to stick up. I mean, come on, man. You did 8.6 billion. Okay, but you didn't come in 8.9. I mean, come on, dude. Really? It's $8.6 billion by one part of their company. It's YouTube. It's just ridiculous, right? But that's the market. That's the market, though. That's the market. It makes no sense to me that you miss by that small of a portion on YouTube revenue, but you're going to ding the whole company, even though overall revenue was up. Even though overall profitability was up, you ding them on that. It's just stupid. So that's why I keep telling y'all guys, this is all market behavior. This ain't got nothing to do with Google being in trouble. It's just stupid stuff, right? Stupid stuff. But for you, it's great because you get to buy in the red at a 5% discount, hold it till it goes back plus 5, plus 10, plus 15%. Now guess what? You get to have some wealth. And that's how you got to look at it, guys, right? That's how you got to look at it. So here's the deal. The report marks investors' first look at how mega cap companies fared during the second quarter. Reports from those names are special interest to Wall Street, as these small cohort is responsible for the bulk of this year's gains. Wednesday's sell-off was caused by a perfect storm of an overbought market, high bar for earnings, and a seasonally weak period for equities. Right? Summer. That's a weak part of the year for equities, summer, right? Also, they believe we overbought in the first 6 months. Because remember yesterday, I told y'all when interest rates are high, typically equities are lower. But now interest rates are high, plus equities are already high. That's what they mean by they were overbought, because they understand they shouldn't have been that high. So they were overbought. And then it has some seasonality because of the summer, right? And then what's the last thing? Experts, so-called experts, are setting the bar so high for these companies. If they miss by a little bit, it's a big deal. See what I'm saying? That ain't the expectation they set for themselves. That's somebody else out here setting an expectation. They're setting some bar so dang on high that if they don't hit it, we told you they wasn't no, this bull crap, right? So I don't even pay any attention to that. I look at business performance. Ain't nothing wrong with Google's business, or they wouldn't have had overall top line revenues what they had it. They wouldn't have had overall bottom line profit like they had. Ain't nothing wrong with their business. Ain't nothing wrong with YouTube. Nothing ain't wrong. It's just, this is what we do though. Anytime things are going too good, you gotta have people want to put a poo-poo on it. They want us, for whatever their reason is, right? They want to poo-poo it. That's just the way it is. And I think it's all directed at Nvidia, if you ask me. That's what I think it's all directed at, but that's my little conspiracy theory. You don't have to believe that. But my conspiracy theory, all this stuff is trying to take Nvidia down. But we got something for them on August 28th. We got something for you on August 28th, baby. We got something for you. Just wait on it. It's coming. Wednesday's sell-off was caused by a perfect storm of overbought market, high bar for earnings, and a seasonally weak period for equities. That is why this pullback has not come as a total surprise to investors, according to Ross Mayfield, investment strategist at Bird. We would view this sell-off as ultimately quiet, viable, because it's against the backdrop of a bull market. I told you I was in a bull market. It's a continuous bull market. It never stops being a bull market. Never. It has never stopped being a bull market in 400 years. It hasn't. It's always been a bull market, and it always will be until they just don't do it no more. As long as there's a stock market, it's a bull market, period. So this gentleman is saying we view this sell-off as a ultimately quiet, viable, because it's against the backdrop of a bull market, and a healthy correction inside of a bull market. Hello. Am I an expert? Didn't I been telling y'all that I've been telling y'all this for a month. Maybe y'all will listen to the expert. Since the expert said what I've been saying for a whole month and a half, maybe somebody will listen to it. See what the expert just said? He echoed what I've been telling you guys for at least 2 months. It's a continuous bull market. You have corrections inside the continuous bull market. I've been telling y'all that. Let me read this again. I'm gonna have to send this guy, I'm gonna have this X. I'm gonna have to X this guy. Tell him thank you for proving my point. We would view this sell-off as an ultimately quiet, viable, because it's against the backdrop of a bull market and a healthy correction. A healthy correction inside of a bull market is something that we view as a place of opportunity. What I've been telling y'all, you build your wealth in the red, you collect your wealth in the green. I'm telling you exactly what the expert just said. And I'm sure this guy went to school for a lot of years. He probably making tens of $1 million a year. And I'm telling y'all the same thing he's telling me. I don't know, man. That's a little scary. Okay, so let me read this one more time and then we're gonna move on. Okay. He's saying because it's against a backdrop of a bull market, a healthy correction inside of a bull market is something that we view as a place of opportunity, guys. Please hear that. Please, 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 if you don't hear nothing else, understand that sentence right there. If you don't want to believe me, believe the expert. The expert says it's a healthy correction inside of a bull market is something that we view as a place of opportunity rather than a place to get defensive or to try to shield your money from the volatility. Mayfield added in an interview with CNBC. Now you ain't got to believe me because I know people don't, but please believe the expert, what he's just telling you here. He's telling you exactly what I've been telling you guys. This is a continuous bull market. This is nothing more than a healthy correction inside of this continuous bull market. Look at this as an opportunity. Don't look at it and get defensive and get all scared and all afraid. Don't look at it that way. Look at it as an opportunity, guys, to build wealth. Google is coming back. I can stake my reputation on it. Google coming back. Because they ain't done nothing wrong. How do you beat top line revenue and bottom line profitability and you get screwed out of 5% of your stock price? Don't even make no sense. Now I get Tesla. I can understand Tesla's slide because that is a little bit of business performance. I can get Tesla's slide, but the whole thing with Google, I don't even get that. But at the end, that's a direct hit on what? Mega cap. That's a direct hit on mega cap of people who ain't really interested in mega cap, but interested in something else. Let's take the attention off of mega cap and put it on whatever sector we're interested in so we can make money. That's what that is, guys. This is what they do at this level, but they can't hold a company like Google down. You can't. It's Google. It's the fifth most valuable company in the world. You can't hold them down. You can't. It's Google. Come on, man. All right, let's move on. The small cap Russell 2000 was down by 2.1% on the day. For the month, however, the small cap benchmark is up 7.2% as investors recently began rotating out of large cap tech names into beaten down smaller ones. I don't know. I still don't know who a small cap company is. Somebody please in the comment section, give me an example of a small cap company, because I don't invest in small cap. I don't invest in mid cap. I invest in big boy blue chip mega cap. That's all I invest in. Now, you might say, oh, well, and guess what? S&P, all big boy blue chip. Ain't no small guys in there, all big boys, all large cap in there in the S&P, right? So I don't know who these companies are, but somebody in the comment section, school me a little bit. I'm sure you will, but school me a little bit. Because I don't know who these companies are they keep talking about. They never mention any of them, but who they are, I have no idea. In July, the Dow has gained 1.9%, while the S&P has slipped 0.6%, and the tech-heavy NASDAQ 2.2 has fallen 2.2. Despite those misses from the mega cap tech titans, the earnings season overall is off to a strong start. More than 25% of the S&P 500 companies have reported their second quarter earnings, with roughly 80% of them topping expectations. There we go, man. See, this is what I'm telling you guys. Don't throw the baby out with the bathwater. Please don't throw the baby out with the bathwater. Don't throw the baby out with the bathwater. What you need to do, regroup yourself, figure out what direction you're going in, what you're trying to accomplish, look at the portfolio, make sure you still believe in the portfolio, make sure that you can reaffirm that you're built for this. Make sure you also understand I build my wealth in the red, I collect my wealth in the green. That's it. And like one of my favorite investors of all time, Warren Buffett, says, be greedy when others are fearful, and be fearful when others are greedy. Just follow that simple way of investing from Warren Buffett. Right now, people are fearful, especially when they see mega cap companies losing ground on stock price. They get nervous. People see Nvidia losing ground, but ain't nothing changed about Nvidia. It's still the same company. They still got the largest market share. They still killed the last quarter. There is no indication they're not going to kill this quarter coming up. I don't have a crystal ball. I don't know what they're going to do, but I'm a long-term believer in this company as long as business performance doesn't suffer, which I don't believe it will. So for me, today was a buying opportunity. I didn't quite pull the trigger on anything today, but I always have tomorrow. Let's see what tomorrow brings, Thursday brings, or Friday brings. Historically, Friday could be a rough day, but we'll see. At one of these days, if it gets to a price where I'm comfortable pulling the trigger on that other 1,700 shares, which I'm going to have to do by 7/31/24 anyways, because that's my deadline, which will be next week. Is that a week from today? What is the date, 24th? Yeah, I think that's a week from today, right? Yeah, a week from today. That's my deadline. So I think it's a week from today. That's my deadline to be at 10,000. Yeah, week from today. So I got a few more days. That's why I wasn't really in a big hurry today. A lot of people might say, well, why are you starting to time the market? No, I'm not. I got 8,300 shares, man. I mean, what are you talking about? I got 8,300 shares. So I ain't trying to time the market. I'm just trying to figure out when is the best opportunity for me to deploy and get this rest of these 1,700 shares that I need to tie that thing up in a nice pretty bow and sit it aside and watch it grow. I rhymed on that. Tie that thing up in a nice little bow and sit it aside and watch it grow. Got a little rhyme there, man, a little rhyme. So I'm a happy guy, man. I'm not going, y'all don't see me panicking about what's going on in the stock market. I done this for 30 years, man. I done seen this play before. This ain't no new play. This play been in the playbook. I done seen it many times over 30 years. The same play. It ain't no different. It's the same play. Let's rattle them. Let's keep them off balance. Let's get them to panic sell. Let's get this thing dirt cheap. And then we're going to swoop in and buy up everything and run that thing back up to the moon. I haven't seen this playbook, guys. This is all it is. It's a continuous bull market. They run the same play. It's the same play. Run it up and then run it down and then run it up again and then run it down and then run it up more and then run it down a little bit, run it up more and then run it down a little bit and run it up more. They keep this doing the same play, guys. They've done it for 140 years. The 1% does the same play with the stock market. We just got to react differently to it. I choose to not buy into this, especially when I look at a company like Google who kills it on top line revenue. They kill it on bottom line profit, but yet and still the stock price falls by 5% the next day. Y'all already know this thing is not even. This is ridiculous. This is ridiculous. But that's our stock market. When you learn the psychology of it, it doesn't bother you because you know this is part of the game. I keep telling you guys, once you learn the rules to this financial game, you can play. When you don't know the rules, it don't make any sense to you. You get frustrated, you stay on the sideline. That's what happens. But you got to learn the rules. One of the rules is you do the opposite of what they do. So if they're telling you to sell, you buy. If they're telling you to buy, you sell. You do the opposite of what they tell you to do. Because see, they want you to do what they're telling you to do, which is sell. They want you to panic and sell right now. And then they're going to swoop in and buy up everything. I'm telling you now, that's what they're going to do. They're going to buy up everything. And then by the end of this year, probably by the end of this year, we're going to be back up at all-time highs again. Just telling you. Telling you how it works. You don't have to believe me. You go ahead and do your own homework because, like I said, I'm not an expert. I'm not one of these guys who gets to go on CNBC. I'm not Jim Cramer. I'm not any of these really billionaire guys who get to go on these shows. I'm not some hedge fund manager. I'm not some CEO of some major bank. I'm just a regular guy sitting in his house doing a live stream on his iPhone 13 Pro. That's it. That's all I got. And my laptop. But yet and still, I still make money. I still have made a lot of money in the stock market because I understand the psychology of the stock market. I understand the rules to the game. So I get to participate, I get to play. You build your wealth in the red, you collect your wealth in the green. That's the way it works. You learn those fundamentals, you'll be fine. I'm so happy that folks over in my private mentorship club have looked at this. It's exactly what this gentleman, this expert in here said. They are looking at it exactly the way this expert said to look at it. Let me read it again for you. We would view this sell-off as ultimately quiet viable because it's against the backdrop of a bull market. And a healthy correction inside of a bull market is something that we view as a place of opportunity rather than a place to get defensive or to try to shield your money from this volatility. This is coming from an expert who gets to go on CNBC, a national financial news network. Got some credibility here, guys. And he's know what he's talking about, as far as I'm concerned, because I feel the same way. I feel the same way about this continuous bull market. And I'm going to sound the horn till I can't sound it anymore. That's what I'm going to talk about on my channel. I'm going to always, but here's the truth. It's your wealth. If you're afraid and you need to get out and you don't want to lose your money and that's bothering you, get out. Get out. It's not worth it. Get out, put it back in your money market account, put it in some bank CDs, and you'll be fine. And move on with the rest of your life. It's not worth it. Because if I couldn't sleep at night, I would just sell all of mine and just take my money and put it in the bank. That's what I would do if I couldn't sleep at night, because it ain't worth it. So please take that in consideration, right? Take that in consideration. Again, guys, if you want to take advantage of those 20 free stocks that Moomu is going to provide you with when you open a new Moomu brokerage account, get down in the description box and click on that Moomu link. Moomu is a self-directed brokerage app that I use and have been using it since January of 2024. It's my primary brokerage app that I use to buy paper assets to build wealth. If you want to try out the brokerage app and get yourself up to 20 free stocks of publicly traded companies, start by going down to the description box and clicking on the Moomu link. Open up the Moomu account today, guys. If you put $100 in the Moomu brokerage account when you open it, they will give you 8 free stocks. If you decide to put $1,000 in your new brokerage account, they will give you 20 free stocks. No question asked, you're going to get 20 free stocks. That's the offer, guys. It's a limited time, and it's only through the link down in the description box. So if you go rogue and you go somewhere else and open something, email me, hey, I opened my Moomu. Can't help you. If you didn't use my link, I don't know what other options are out there for you, but my option is up to 20 free stocks. So check it out down in the description box and put yourself in a position where you can start building some major wealth. Put yourself in a position where you can take advantage of this incredible opportunity to buy paper assets at a deep discount right now. As the expert just told you, in this bull market that we're in, this is just a correction. That's all it is. He said he calls it a healthy correction inside of a bull market is something that we view as a place of opportunity rather than a place to get defensive or to shield your money from volatility. So in order to take advantage of this opportunity that this expert has just outlined for you, CNBC expert here, Mr. Mayfield, he just outlined for you in this continuous bull market, as I call it. He called it a bull market, but I call it a continuous bull market. You need a brokerage app. Why not get yourself up to 20 free stocks for trying out the Moomu brokerage app? If you're with me on that, get down in the description box and click on that Moomu link and open it up. And go ahead and grab yourself those 20 free stocks when you put $1,000 in the brokerage account. Grab yourself 8 free stocks if you put $100 in the brokerage account. And then you're ready to go. You're ready to start buying some paper assets to build wealth. Now, I'm going to send you some tutorial videos, right? Just send me an email through my website, www.richardfain.net. Second link down in the description box. Click on that link, second link. It'll take you to my website. All you got to do is send me an email through the website and say, Richard, I opened my Moomu account. I funded it. I need to go ahead and get them tutorial videos so I can start learning how to, use this brokerage app so I can start buying some of my favorite companies and my favorite ETFs to build wealth. And then guess what I'm going to do? I'm going to go ahead and send you out that 2 tutorial videos that'll walk you through how to start using this app. And then what my recommendation is take a look at my 2 wealth transfer blueprints and see if there's something that I'm buying currently from paper asset standpoint that interests you. And if it is, check it out. I'm not your financial advisor. I can't tell you what to buy. I can't tell you when to sell. I can't do research for you on companies and all that stuff. What I can do is I can tell you what my opinion is on the companies that I'm invested in. And if you like my opinion and you think it should be something that you want to give a shot, there's no rule or law against you not giving it a shot. You just got to take the responsibility on the decisions that you make. Can't push those responsibilities back on me. I don't make anybody invest in anything. I don't take money from anybody to invest it for them. So don't push nothing back on me. If you feel like you made a mistake, then own up to it. You made the mistake, learn from it, keep moving. That's what we do. If I make a mistake with my 10,000 shares of NVIDIA, who do you think I'm going to point the finger at? Oh, I'm going to point the finger at that guy. I'm going to point the finger at that girl. No, I'm going to point the finger at me. I made the decision. I pushed the button. Then nobody make me buy them 10,000 shares but me. I pushed the button. So let's just be adults about this. There is a risk associated with investing in the stock market. It is. But there's a risk every time I get in my car and drive down the street, there's a risk. Life is about risk, right? Every day we are encountered with situations that are a risk. Every day. That don't mean we don't go outside, do it? No, we do. We accept that there's going to be a risk when I go outside. So when I'm investing, trying to build wealth, I got to accept there are going to be some risks along the way if I'm going to invest this money in companies in order to double, triple, quadruple my net worth. There is risk associated with that. There's no way around it, guys. But the way I reduce my risk is I invest in big boy blue chip with proven historical track record of multiplying money for people. That's how I reduce my risk, is by investing in proven companies. That's why I only invest in big boy blue chip. Now, every now and then I might buy a little smaller company like Serve Robotics. But the only reason I'm buying Serve Robotics is because the 900-pound gorilla bought it. NVIDIA bought a 10% stake in that company. Hey, man, if it's good enough for NVIDIA, it's good enough for me. I don't need to go down the rabbit hole. NVIDIA done already went down the rabbit hole, and they felt like the rabbit hole was comfortable. They bought 10% of the company. They liked the rabbit hole so much. So who am I to try to go deeper than them? It don't make no sense. They like the rabbit hole. They bought 10% of the company. 3,700 shares. 3.7 million shares. 3.7 million shares they bought. They only got 37 million shares available. NVIDIA bought 10% of that 37 million shares. So they've already done the due diligence. They've already done the homework. So I'm buying Serve Robotics because NVIDIA bought them. That's the only time you're going to see me buy a small company. Is if one of my big companies who I really, really like, and I'm pulling on to quadruple my net worth buys them, that's good enough for me. Let me throw a little bit at them. Who knows what the stock price will be in 5 years? Could be $300, $400, $500 a share in 5 years. If NVIDIA get behind this thing and you'll start seeing these little robots all over the place delivering food. That's all NVIDIA, man. I just hit a lick and didn't even know I hit the lick. So I don't know, man. That's just me. You guys do what you got to do. Hey, I'm okay with it. I'm going to keep doing my thing. I hope you guys keep doing your thing. Keep doing whatever you can do to build wealth. Like I said, if you want those free stocks, get down in the description box and treat yourself. Don't cheat yourself. Get them 20 free stocks, man. If you got $1,000 and you can put it in there to invest. See, the $1,000 ain't to buy the stock. The $1,000 is to qualify you to get the free stock. Then you take the $1,000 and you go buy some other investments. Or you take your $100 when you get your 8 stocks and you take that $100 and you buy more investments. So you don't put the money in there to buy the stocks that they're giving you for free. They're free. That's why I said free. There ain't no, oh, I put my $100 in to buy my free stock. No, you ain't buying no free stocks. They're giving you the free stocks. You take your $100 or your $1,000 and then you invest it, right? So long as we got that clear and we understand that, I'm going to get on out of here. Thank you guys very much for rocking with me. Let's keep doing what we need to do to build wealth, guys. Let's not be afraid. Let's just continue to do what we need to do to build wealth. And let's not be afraid, okay? When it's time for you to get out, get out. There's no shame in that. When you've had enough, tap out. Just tap out. That's all you got to do. Tap out. Real lightly, tap out. Go on about your business. But for those of you that ain't ready to tap out, I think it's an opportunity to do what? Build wealth in these red days. Because green days are coming. Winter is coming. Green days are coming. You just got to be patient and wait for them. We are in a continuous bull market, and this correction will turn itself around, and green days are coming. Just be patient. All right, guys, I appreciate you. Lock it in with a thumbs up if you don't mind. Appreciate you very much. I'll see you guys, or at least see some of you guys back tomorrow morning, 10:30 a.m. Eastern time. For a new live stream, new video. Hope to see some of you guys there. I'm very excited about these next several months. All the things that'll be happening with reduction in interest rates, with NVIDIA's Q2 numbers coming out, the rest of the Magnificent Seven coming out with their Q2 numbers, with inflation to continue to come down. I'm just excited about where we're headed. I hope you are too. I hope you stay invested. I hope you continue to trust yourself, trust your instinct, and trust your companies that you got your money invested in. As long as there's no business performance issues, I think you'll be fine. Appreciate y'all, man, for rocking with me. I'm going to catch up with you guys tomorrow. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'm going to catch you guys on the next one. Peace.